Hi, this is James Paynter here from Dynamic Outcomes. I think it's opportune to give you a bit of an update as to where we see the Rand is going from here, especially with what's happened the past week, the massive volatility in markets and the panic and fear that it's creating. Very emotional time, and at times like these we need to have an objective view as to where the market's going. So as we can see here, we've all but tested the all-time high of 1385, and which was made in 2001. And what is important to see is that we are at a high resistance cluster here. The market has resistance levels based on our Elliott Wave analysis, our trend line analysis, and Fibonacci, which all work together. And what this is telling us is that we are busy testing a high resistance in sort of the 1340 to 14 area. So let's just have a look at a few of those. As you can see, we've had this move from early 70s up to 2001, and then we've had a three-wave correction here which completed in 2011, and since then we've had a 1, 2, 3, 4, and we're in now the fifth wave. As we know from Elliott Wave Principle, that once the fifth wave has completed, we can expect a corrective move back down, three-wave corrective move back down into the area of the previous fourth wave. Alright, so that's what we're looking for, is once this is completed, for a move back down to below 1140, which is good news for the importers, but we have not topped out yet. So we are at an extreme. We are primed for reversal, but we haven't seen that reversal yet. If we look at some resistance levels using our trend line analysis, see here we've got a long-term trend line with the lows, connecting the lows over the past 30 years plus. And if we draw a parallel line to that through this point B, we get a resistance level of around about 1340 or so. So that's one trend line that is providing resistance. And then also we can see that this move, which is characteristic of Elliott Wave, or characteristic of market movements, that this move since 2011 has been bound by two parallel lines. On the lower side, a support line; on the upper side, a resistance line. And the move last Monday actually spiked through that resistance line before being rejected. Okay, we've had a move now up towards that resistance line again. So that's providing resistance. And then, of course, we've got the all-time high of 1385. And then if we use Fibonacci ratios here, if we take the move from the low to the high and take 61.8% of that and extend that from the wave A low here, we get a figure here of 1374.98. So that's in that cluster there. And then two, if we take this wave B here and we take a 38.2% of that wave and extend it, we get a figure of 13.8911. Now there are various other Fibonacci projections that we can make. For instance, if we extend this wave 1 and we take this the length of wave 1 and extend that by 1,618, we end up with a projection just around about the 1370 area again. and also if we extend the wave 1 by a Fibonacci ratio of 2.618, we also end up with a level within this price cluster. So by rights this should hold, but the danger is if we break above this level, and the danger is that if we do, we could be seeing a similar situation as we saw here in 2001, where the market for a couple of months just takes off. And you see here from, we were here around about 9.10, and then it just punched right through to 30.85 before collapsing and coming back down. Again in 2008 we can see we had this spike up and then it collapsed and we came down again. So overall we're looking for retracement once this is completed back below 1140, but just an alert that we need to watch this level. Hopefully this holds, but we'll be watching this out for this over the next few days. And if you've got any rand exposures, what I would suggest is get in touch with us, use the link below and try out our service, 14 days free of charge, and then at a nominal rate for the next couple of months, and then we can work out some arrangement between us that will make it worthwhile for you. So thank you.